Mike Briggs is our cattle market analyst this week. While the cost of beef is coming down for the consumer, per head losses are accelerating in the feedlot. The average price of ground beef fell in October to its cheapest level since August 2014. But according to the USDA, cattle marketed last month lost more than $500 per head, marking the 11th consecutive month of negative feeding margins. The latest Cattle on Feed report showed placements in October were 4% below last year, while marketings were down 3% and the lowest for the month since data began in 1996. We talked with Mike Tuesday morning and started by looking at cattle price movement over the month of November.
Well, you know, we used the term last time, dumpster fire. Still raging. Got a big, nasty dumpster fire going on. And for the time being, I don't see it go away. We have got to get rid of these big cattle. We are slaughtering roughly, harvesting 20,000 cattle less a week than we were last year. And the report came out last week from the government that we produced like 2.37% more beef on that many less cattle. Until we get rid of these big cattle, we're not going anywhere.
Yeah, the last time we talked, the market had taken a dive. You thought it might bounce off. It did. Saw life for a little bit, then came back down. What's going on? Is it just the supply?
That's a great question. You've got a struggle. You've got a micro struggle and a macro struggle. The long-term trend of the cattle market is down, and you've got funds that follow long-term trends, and the funds have been pounding on this thing because they think the long-term is down, and I agree with them. But you've got a micro deal there. You've got several months here where we have not placed cattle. Well, guess what? Eventually that's going to show up. The question is even though we have less numbers, are we going to continue to make them so big that we still actually have a larger supply of beef when we get done? And the more you do that, the longer this market's going to stay in a dumpster fire.
Are the discounts increasing for those bigger cattle going out?
Great question. They stopped discounting these cattle, which tells me we're coming to the end of it, because, and they all bemoan it, they all complain about it. Well, I'm talking about the packers. And it's real simple, guys. You want us to quit doing it, discount them, not discounting them. So it tells me they see the end of the pile of big cattle, but I don't know where that end is. Hopefully it's within the next couple, 3 weeks.
The USDA has tracked not only big cattle going out, but big coming in. So this year they're saying that 800 pounders coming into the feedlot, they'd normally make up a quarter of the market share. But now they're taking up 40% of what actually comes into the feedlot. Does that hold consistent?
Absolutely, and that's gonna have an effect, because you're still gonna have big cattle producing lots of beef. We've seen virtually or very little calf movement this fall because the decrease in the price, the rancher didn't want to take the hit, so he's weaning them, he's backgrounding them. Sometime those got to come. Well, those are going to be big. You're going to continue to see big cattle until either the economics of the cost of gain versus the sale price changes, or until you see consistent discounts by the packer to where we just can't do it anymore. But the economics say make them big, and that's what we're going to do.
Hate to ask where margins are right now.
They are dumpster fire. I like that term. They're brutal. They're $400 and $500, $300, $400 and $500 losses. And it's not just because the market is so bad. That's a contributing factor, but people paid too much for those cattle, never really had a chance to lay them off, and now we're all in this big giant waller hoping it ends pretty soon.
When do you think you could see profitable margins again?
Great question. It may be until the cattle that are coming in now, because we've beaten the feeder price up so bad, it might not be till the cattle that are coming in now go out. And so it may be a while. There may not be good margins until March, April, May, maybe.
On the flip side, where are the margins for the packer at?
He's doing pretty good. The packer has done a tremendous job of managing supply, not overkilling their supply, overharvesting, not overusing their supply and getting themselves in trouble where they've got to go compete for limited supplies of cattle. They've done a great job, but part of the thing that's either allowed them to or not, our demand on the consumer end, it seems like 1 pound too much is 1 pound too many, so they can't push the beef. We're not moving enough beef. I know there's a lot of complaints by people that the retailer has not lowered his prices, and it's true, but he contends he's selling it.
Would you say then that lower beef and beef is coming down, it's becoming cheaper, doesn't have a big impact?
No, it does, but it's a delayed impact because the retailer does not lower retailer moves like a glacier. He doesn't raise his prices very fast. He doesn't lower his prices very fast. You know, at some point, hopefully the American public wakes up and goes, gosh, this stuff is cheap, but you still got the problem of competing meats where pork and chicken are virtually free. And so that beef can't get too far away on that spread. It's not gonna happen.
Thoughts on corn prices?
That's not going anywhere either. You've had a tremendous harvest, you have big supply of corn, you don't have very much export demand. Ethanol market is struggling a little bit because you've got cheap oil. That's not going to change. I don't think corn goes anywhere. It's one of these deals where it's going to have to go down to a price where it creates demand. When you had $7 and $8 corn, you destroyed demand. To get that demand back, it's going to be cheaper. It's not going anywhere.
I want to talk about the weather here as we close out. We're talking on Tuesday. There is a chance of more rain or snow coming later in the week. Tell me where or how performance has been and kind of what you're looking at as we close out.
That's one of the, you can say good things about bad weather. It's going to cap these big cattle off. It's really going to hurt performance. As you can see behind me, it's a little muddy. And if we get wet again this late in the year, we're probably going to live with mud all year. And so I'm hoping against hope that we can miss the storm this week, because after this week, it's going to freeze up and maybe we can have some manageable feedlot conditions. If we don't, that's going to be really hard on performance. It is going to keep weights down, which I think long-term will benefit the market, but it's going to come out of your pocket a little bit.